Almost no one is discussing the significant event that occurred on the blockchain in the past 48 hours. More than 500 million XRP have been taken out of well-known exchanges like Coinbase, Kraken, and Binance. Analysts, dealers, and even insiders are wondering why 500 million tokens have vanished and subtly shifted into private wallets in a concerted exodus. What do we not know that the whales do? Because there is always a signal when this kind of capital movement occurs, and this one may be the strongest we have ever seen. Data from bond chains is truthful. In the past 2 days, Whale Alert, XRP Scan, and BitHump have all verified significant withdrawals from exchange wallets. 50 million, 75 million, and even 100 million XRP transactions have been traced as they have left centralized platforms and entered institutional-grade vaults, cold storage wallets, and new custodial addresses. When whales withdraw their holdings from exchanges, it usually indicates one thing. They're getting ready for a major event. It can be a regulatory event, an airdrop picture, or a price breakout. However, when it occurs, they do not want their assets to be sitting on an exchange. Since this isn't typical behavior, let's investigate what might be causing this departure. Exchange balances are falling to levels not seen in many years. For instance, after a week, Binance's XRP reserves had dropped by about 35%. Similar drops are seen by Coinbase and Kraken, but the price hasn't changed. Not quite yet. That's what's so intriguing about this. Demand hasn't yet awakened, but supply is exiting the open market. This type of arrangement occurs prior to a supply shock, when buyers start pouring in. However, there isn't any more liquidity to take them in. Prices then skyrocket vertically rather than rising steadily. Now, the Flare network and its ecosystem of impending airdrops is one reason for this mass retreat. XRP holders have previously profited from a number of incentive events including Flare, Songbird, and others. A fresh, massive airdrop that rewards holders who self-custody their XRP is rumored to be on the horizon. These kinds of distributions usually call for snapshots as proof of ownership, which are impossible to confirm for coins that are just sitting on exchanges. Whales are hurrying to transfer their XRP from exchanges to private wallets, where ownership may be confirmed directly on the chain if an airdrop snapshot is about to occur. However, another notion is, gathering a lot of traction, and it's even more explosive, to be honest. Some people think Ripple is genuinely getting ready for a long-awaited move that might, put XRP at the center of Wall Street. A Ripple initial public offering, IPO. Early investors and strategic partners may get shares, bonuses, or awards in proportion to their XRP holdings if Ripple decides to go public. In preparation for that occasion, insiders may already be setting up shop to demonstrate ownership. Moving XRP into self-custody wallets in this situation is not only wise but also necessary. In contrast to a personal cold wallet, exchanges do not associate wallet addresses with confirmed identities. The whales will be the first to get digital shares, dividends, or tokens connected to XRP ownership if Ripple or any affiliated company decides to do so. And they are ensuring that they can provide proof. A new collaboration or perhaps a significant liquidity event is also being discussed. Hundreds of banks, payment processors, and remittance providers are members of Ripple's network of institutional partners. The whales would be the first to know if a significant international settlement organization, such as a central bank or perhaps a sovereign digital payment system, were to formally announce an integration using XRP. Before being made public, Ripple's relationships frequently undergo months of silent development. This implies that insiders might be preparing for a significant revelation that would cause demand to spike overnight. To ensure that their XRP is completely safe, liquid, and prepared to move when, the floodgates open, it might be wise to pull out before the news breaks. This notion is substantiated by the on-chain behavior. Many of the addresses receiving these massive inflows aren't brand new retail wallets, according to analysts. Rather, they are institutional custodial setups and multi-signature vaults, the type utilized by private funds and, very large holders. In a single transaction, 92 million XRP were sent to a wallet that on-chain experts identified as Ripple Whale Cluster 48. Within a few hours, another that is connected to an institutional custodian in Singapore added 75 million XRP. This is intentional repositioning, not panic selling. This is why that is important. Supply leaving exchanges essentially lowers the amount of XRP that is available for purchase or sale at market value. We move into an era of scarcity if that supply doesn't come back. Similar exchange outflows occurred prior to XRP's historic surge from less than a cent to more than 330 in a matter of months during the 2017 bull run. Before the spike started, the exchange supply in that cycle dropped by 40%. We are currently observing the same pattern. This time, however, there is a lot more coordination, a greater volume, and real institutional infrastructure supporting it. Let's think about timing as well. As the world's attention was drawn to Bitcoin and Ethereum ETFs, the XRP market has been stabilizing for months, staying in the same range. However, the circumstances for a significant XRP catalyst are all in place now that the legal clarity has been established. The BlackRock ETF rumors are circulating, and Ripple is growing its CBDC pilots. It's possible that the whales are lining up before a turning moment, a confluence of institutional, technological, and legal elements. The psychological aspect is another. Retail follows the movement of whales. Get your coins off exchanges because large withdrawals send a message to the market. Exchange liquidity can vanish virtually instantly once individual investors start doing the same. A supply shock in XRP would now appear as a candle rather than a gradual upward grind when buyers return a Vern Bruin scenario. Straight ahead, no turning back. How high could it go then? Analysts predict that a 50% decrease in the exchange supply, along with institutional inflows via partnerships or ETFs, may push the price of XRP into the $25 to $50 range in a matter of weeks, based on past trends and current liquidity models. It's not fantasy, it's arithmetic. When demand rises and liquidity evaporates during a bull market, digital assets react wildly. In 2020, Bitcoin succeeded. In 2021, Ethereum did it. With a higher transaction velocity and a smaller market capitalization, XRP could move even more quickly. Let's look at a basic example to better grasp the scale. 500 million XRP is equivalent to almost $250 million of liquidity departing exchanges at present pricing. All trading pairs might experience a cascade of price pressure if even a small portion of it were reintroduced into the market at higher prices. The impact might be profound if you combine that with institutional demand from banks, exchange-traded funds, and international payment networks. It may seem ridiculous to go from 50 cents to $50. However, it's not only feasible but also foreseeable when sentiment, speculation, and scarcity are all in balance. Additionally, keep in mind that whales don't just move. These are organizations that have insider knowledge. Early investors, fund managers, and even corporate wallets connected to the Ripple ecosystem. Their actions frequently serve as a leading sign of the direction of the market. When pride breeds Zhao Lias, curses grow, and when they disperse, Rejurser and Anda Jiao Diru Dieters, markets chill. When they aggregate, wide Zaubi Warg Sin Baldur Gem. However, distribution isn't what we're witnessing right now. Isindal Diwo Didur Destater it's consolidating, and it's bullish because whales are controlling their supply and locking it away. According to some observers, this trend might also be related to Ripple's recent development of on-demand liquidity, or ODL, throughout Asia and the Middle East. Banks frequently use XRP to